Okay, good evening, Marshall, Reddick, clients and investors. Really excited to have you all on our webinar tonight, and thank you so much for taking some time this evening to join us. This is an incredibly fun, interactive topic that we're presenting tonight, our mentoring consultation workshop. It's going to go a little more into the ins and outs of what it entails to work with us here at Marshall Reddick Real Estate, how we help our clients evaluate markets, investment property, how to choose the best markets and investment properties for our specific goals. We'll look at some real life examples and then what the process of purchasing a property entails. So jumping right into it this evening, I know we probably have some new faces that are attending a Marshall Reddick event for the first time. So welcome, we're really excited to have you on. A bit here about what we do at Marshall Reddick Real Estate for those first timers, and a refresher for those of us joining a second or a third or a fourth webinar or event. We are a full service brokerage. Here at Marshall Reddick Real Estate, we help our clients buy and sell real estate in 16 markets across the country. That includes investment property, that includes primary residences. Myself, as a realtor and a real estate advisor, work day in, day out with clients, evaluating homes, evaluating markets, setting and quantifying their goals, and combining the two. So helping them find the right property for their specific goals and criteria. We're also a private money lender, so we offer asset-based loans for those clients of ours who are investing with their retirement funds, for example, or those clients of ours who are in or have more than 10 conventional mortgages. So we offer alternative investments and financing programs for those clients who would like to utilize them. And then in all 16 of our markets across the country, we offer full service property management because, of course, property management, the X factor in owning investment property, and a huge part of the team in investing in real estate. I can't stress enough how important it is to work with an entire team when you're investing in property. And there's a joke in investing in real estate that says that you date your realtor, but you marry your property manager. And I can't stress how true that is, because your property manager is the one who is going to be managing your asset for the duration of your holding period. They're going to be the ones handling your tenant calls. They're going to be the ones handling maintenance requests, placing your tenants, processing your rental payments. So I can't stress how important it is to work with a vetted, knowledgeable, experienced property manager. And we'll certainly go into more detail about all of the services that a property manager provides towards the end of this webinar as well. A little bit about myself. My name is Daniel. I am a real estate advisor and a realtor here at Marshall Reddick Real Estate. I have been here for 3 years. I'm an investor myself. I've helped clients buy homes, sell homes. I've built homes, I've bought homes, I've sold homes, and that ranges from everything from 1 unit to 10 and up. And it's a very, and that ranges from clients who are just starting all the way up to seasoned investors. So a very diverse, eclectic type of experience in working with all types of investors, many different types of properties, and day in and day out what I do is work with clients, like I said, to use the tools on our website and the education that we have, navigate through our different markets, our different investment properties available, and utilizing all of those tools to find the right investment property for your specific portfolio. And when I say specific portfolio, I'll go into a little more detail in just a moment about what that means. But a little more background, my degrees in finance, licensed California Realtor, and can assist in every market that we're in. Going back to what I said just a moment ago about choosing the best investment properties for your specific criteria. Working with clients, there's a very popular question that I get, and it's, what is the best real estate market? And I cannot answer that question unless I know what it is that you're looking for. Every single person on this call this evening is on for a specific reason. You know, it could be that you are looking to find a way that's going to help you retire early. Maybe you're looking to replace your passive income. Maybe you are not happy with the returns you're currently seeing in your other investments, your stock portfolio. Maybe you are unhappy with the returns you're seeing in your IRA. You name it, all of us are at different points in our lives. All of us have different goals, both short-term and long-term. So when working with an advisor like myself here at Marshall Reddick Real Estate, the first thing that we're going to do when we hop on a call and discuss Marshall Reddick, discuss different investment properties, discuss markets, is we're going to determine why you're investing in the first place. And in understanding why, it starts the process of getting to a property in a market that makes sense. And your why is always quantifiable, as in, if you are looking for passive income and cash flow is important, well, then we need to determine what that cash on cash return, or what that amount of cash flow that you need on a monthly or an annual basis is, and what that amount of cash flow for one investment property or your first investment property for your entire portfolio. Then there's some of us who might not be interested in cash flow. Maybe passive income is not important. Maybe what's important is your total return on investment or appreciation. Just your money working for you in the best possible way that it can. So there are other markets more specifically geared towards appreciation that might not cash flow as well. For example, a market that is phenomenal for appreciation is a market like San Antonio, Texas. Markets that are phenomenal for cash flow are markets like Fort Myers, Florida, or Oak Grove, Kentucky. And so when investors ask, what is the best real estate market, we really have to determine what types of returns you're looking for, and that will take us to, at least start taking us to different markets that will make the most sense for you. So after we've determined why you're investing and what you're looking for from your investment, we need to determine how you're going to acquire the investment. All of us have different financial situations, different jobs, different incomes, different portfolios already, and we can evaluate all different avenues to acquire an investment property. A lot of us are going to pursue conventional financing. conventional financing, you're going to see the lowest down payments, lowest interest rates, but that's not an option for all of us. Some of us are going to use private financing. Some of us are cash investors. Some of us are going to use equity in property we already have. Maybe we'll do a 1031 exchange. We'll talk about what that means. Maybe we'll use equity in our primary residences. That's an option as well. So we'll evaluate what makes the most sense for you, and then we'll make the connections so that you can utilize whatever method of financing or acquisition that we deem the most appropriate. Of course, not all of us are ready to go out and start making offers tomorrow. We're all operating on different time frames, especially those of us who are just learning about real estate investing. There is an incredible amount of due diligence that we need to do to become comfortable with investing in a tangible piece of real estate. And so some of us might be ready in a month to add a property into our real estate portfolio. Some of us might not be ready for a year. And I work with clients at every stage of this process. You know, I hear clients sometimes say things like, I'm not ready for a phone call. I won't be doing anything this year. But that's okay, because our initial phone call will at least get you off on the right path. There is an abundance of educational material and resources and tools just on our website, events and webinars like this one that we can refer you to and discuss with you, so that even if you're not ready to go just yet, by the time you are ready to invest in a tangible piece of real estate, you are going to have done all your research up front. You're going to know which market makes the most sense for you. You're going to have quantified your goals. You are going to have taken a look at examples, read our property rating ebook, know what property class you're looking for, know what down payment is going to be. You're going to have spoken with a lender. So there's so much that we can do between now and the point that you're looking to invest. And the sooner we start our discussions, the more prepared you're going to be. So once we sort of set how and when we're investing, financing is in place, we know what types of returns we're looking for, that's going to tell us what and where to invest. I mentioned just a bit ago, all of us have different financial situations. And so knowing how much you're looking to invest, knowing how much you can afford, and knowing the type of return will open up some markets and and then we start narrowing down where we want to invest. And then what is important, as is where. But again, it's all dependent on the types of quantifiable returns that you're looking for. So if you're an investor looking for cash flow, maybe when we're setting our criteria for what we're looking for, we're going to focus predominantly on multifamily homes where the rent to price ratio is highest. So most of your returns coming in the form of passive income or cash flow, essentially. Or maybe you are a really risk-averse investor. You only want appreciation. You want very little volatility. So then we'll talk about that, and for where we're going to focus on markets like San Antonio, like Indianapolis or Oak Grove. And so once again, once we determine your specific criteria, your financial situation, what you're looking for, we're going to be able to go into our website and start looking at different markets, different types of properties, and finding the ones that make the most sense for you. And once we've had those discussions, 1, 2, 3 phone calls, get you connected to the right individuals for financing, whether that be Reed Hazard, our preferred lender at AmeriFirst, or Patrick Prunty, our head of private lending here in office. We'll get you introduced to the rest of the key players. So for those of us on the call today that are new to Marshall Reddick, key players in a real estate transaction or in investing in real estate. First and foremost, myself as your advisor, and then of course your lender. You have your regional rep. In every market that we're in, we have a designated buyer's agent, someone that represents you exclusively on the ground, who is walking the properties you see on our website, underwriting them and making them available on our website for you as investors to be able to review yourselves, someone who is going to represent your sole interest as the buyer. And then, of course, your property manager, who's going to be managing your property for the duration of the holding period, like I had mentioned, and other key players as well. That's just 4 or 5 to start, but you also have your insurance agent, your home inspector, etc. And the real value in working with us here at Marshall Reddick Real Estate, not just the mentoring, not just the tools we have available on our website, but the vetted, knowledgeable, and experienced teams that we have established already in every single market to help our clients, and I'll go back to this, find the best property in a market that makes the most sense for what they're looking for. So it really starts with the property rating ebook. If you haven't yet read this book, I highly recommend hopping on our website. You can find this under the properties tab on our website, and it's available for free. And it's the best place to start in evaluating investment property. It explains our property class rating system, and it explains how to choose, like it says right there on the cover, the best real estate investments for your specific portfolio. And at the end of this presentation, you'll have all my contact information. If you would like the PDF version just sent directly to your email, please do reach out to me after the seminar. I'll be following up in any case to make sure that you have this available. But it's such a powerful tool. Like I said, in analyzing the property on our website and understanding those numbers a little better, but really in starting to set your own specific goals and knowing where to look in any market for the right types of properties for you. All right, and that will launch us right. These webinars are interactive, and polls really help us better understand the types of clients we have on the webinar tonight and what it is that you all might be looking for in terms of a real estate investment. Now, these are completely anonymous, so please don't hesitate to share. But we will go ahead here and launch our first poll. I am interested in investing in real estate for, and the options here are cash flow, appreciation, a mix of both. I have no idea. I am just here to learn. And we'll give you all about a minute here. All right, a few more seconds here, and then we'll get this poll closed. All right, thank you all for your participation. Now, if you take a look at the results here, we can see that actually a slight majority of us are looking for cash flow. A little bit of us are looking for a mix of both, and about 1 in 4 are just here to learn. So very helpful. We are going to go over examples here that are reflective of everything that the audience tonight is looking for. So let's jump in. First scenario we're going to look at tonight is a Marshall Reddick client named Alex. Alex's profile can essentially be seen right there below. Alex is a young professional, W-2 employee, mid-level manager, has a significant saving, $80,000 saved up, doesn't really know what to do with it. He owns his primary residence and has good credit. Owning the primary residence is an important aspect. He might not have invested yet, but he's definitely been through a real estate transaction, but no rental property experience. Being a W-2 employee, 32 years old, it'll be a little while before Alex is looking to retire, at least 20 years. And he's also single, doesn't have any dependents. So Alex is really representative of many clients here at Marshall Reddick Real Estate. And based on Alex's profile that we just looked at, Alex is an investor who's going to be looking at the highest return on investment possible. Cash flow is not very important, as in it doesn't really matter if the return that he's seeing is immediately tangible. If it breaks even in terms of cash flow, but is in a market that appreciates really well, where your tenants are paying down your mortgage and you're seeing the highest total return on investment, that's okay, because we're not replacing any income right now. We're not looking to retire very, very soon. And so for an investor like Alex, I would recommend just a steadily appreciating market. And in this case, I might recommend a single family home, given that it's his first investment property. You know, you always learn the most on the first one. And so you can see here the types of goals that Alex might set for himself based on his profile. Max purchase price of $250,000, A or B class investment property. Those are going to be the in the best neighborhoods. They're going to appreciate the best. They're going to be newer, in better school districts. You're going to be reducing your maintenance and vacancy. Basically, a real hands-off as possible. One question you might have, though, is, you know, based on Alex's profile, how are we going to determine that a market like San Antonio is the best market? How do we know that San Antonio is the best market for appreciation? Well, let's take a look here. Right here, what you're seeing is a sample portfolio. Not every investor wants a sample portfolio created, but I love putting these together because it really, it's such an easy way to see what is capable in real estate investing and what type of portfolio is available to you. So you see here, this would be Alex's sample portfolio year one. And here we have a property in Texas that I would, as Alex's advisor, recommend in investing, especially given the profile that we just discussed. Brand new construction, single family home in the San Antonio metro, listed at $216,000. Now, I started by going straight to this property because this is one thing I want to highlight, especially for those clients on the webinar tonight that might be new to us here at Marshall Reddick Real Estate, is every investment property on our website has its own individual profile. where you can hop on, scroll through the different pictures, and really understand more about the property, its location, the market, its appreciation, and property class, and the financial performance of the property itself. Our financial calculators are one of the most popular, one of the most powerful tools that you can utilize in evaluating an investment property, and will give you the estimated financial performance of your property for the duration of your holding period. And every single one of these tabs are completely adjustable. And one of my favorite things to do as an advisor is go through the financial calculator with my clients line by line to make sure that you're able to read and utilize these calculators so that you can evaluate any property that you'd like. One very powerful aspect of our website is the list of properties in general. So I want to do something here really quickly that will be pretty powerful, and that is learning how to use the filters on our website and inputting your criteria to find property that meets your criteria. So let's look at this example really quickly, okay? So first and foremost, always clear your filters when you're doing a new search. So remember, let's talk about Alex's profile. So right now, we're going to leave all markets selected because we haven't determined a market that's going to make the most sense for us financially yet. Status, always, you know, when we're looking in this scenario, I would only choose available properties. Although if you want to look at contracted properties that are in escrow or sold properties that have closed escrow, then you could definitely take a look at investment properties that other clients have invested in the past. But right now, taking a look specifically at properties that are available. We mentioned that Alex has a essentially max investment capital of $80,000. He doesn't want to invest in properties above that $250,000 price point. And for the time being, you know, he feels most comfortable sticking with a single family home. So you can input all of that sort of criteria into our filters, and it'll narrow down markets and narrow down properties. And ultimately, you'll end up with a list of properties that make sense to you specifically. And you know, we are using just a few filters. We've more filters we can apply to these properties, although I always recommend starting as broad as possible. And so Alex, remember, he's looking for the highest return on investment possible. So one thing I like to do too after we input our criteria is sort, in this case, by return on investment. And what we're going to have now are properties with the highest return on investment that meet our specific criteria, are within the realm of possibility based on our financial situation. And just scrolling down, you can see here markets like Southwest Florida, like San Antonio, Texas. The property we just took a look at right there, number 4 on the list with annual ROI of 18.93%. And in this way, through our discussions, through setting your criteria, understanding your specific profile, we're able to narrow down markets and narrow down properties that make the most sense for you. And whether Alex pursues Florida or Texas is going to be dependent on even more criteria, further questioning, and understanding what types of investments he's comfortable with, uncomfortable with, markets he's comfortable with and uncomfortable with. So this is really where it all begins in taking us from an idea of investing in real estate to having, you know, cash flowing, producing investment property. So now we'll take a look at a second example here. Now we're going to look at a little more experienced investor. So this investor goes by the name of Bethaney. She is 63 years old, plenty of savings, great credit. She actually has a little bit of investment property experience. She has a primary residence. She has she has one property in her portfolio that she rents out, but she's looking to retire now as soon as possible. Empty nester, really looking to replace the income she gets being a business owner, and really take advantage of essentially financial freedom and retirement. So the types of properties Bethaney is looking for are going to look a little bit different. I want to highlight how important it is that she has one investment property and she's looking to retire as soon as possible, meaning she's looking to cash flow. She's looking for the highest cash flow, and she's looking to replace her income. You know, having one investment property, my first question would really be, how long have you owned it? What sort of, how has it appreciated? And this is a scenario that we are seeing so often with our clients who have invested in Southern California or in any California market in the past 10 years because of the rapid appreciation that we've seen. A lot of our investors are taking advantage of 1031 exchanges, especially properties that have appreciated incredibly, but aren't cash flowing very well. And so they're deferring that equity without paying capital gains into higher cash flow producing properties. So this is the scenario I'm painting here with Bethaney. Bethaney is looking for cash flow. She's going to be looking in the B or C class range because those are, they don't appreciate as well, but they do cash flow better. The rent to price ratio is better. And so Bethaney is going to be doing a 1031 exchange and needs to replace about a $500,000 worth of property. So let's take a look at what sort of portfolio we can build, needing to do a 1031 exchange specifically for cash flow. And one cool thing about utilizing different tools in real estate is you can start off by investing specifically for the highest return on investment or the most appreciation possible, and then utilize a tool down the line like a 1031 exchange. And as your life situation changes, as your own personal goals change, move that equity into more cash flowing investment when you do need to replace income and do need cash flow. So let's take a look here. Portfolio for Bethaney. I pulled just a few properties from our website today to create a nice sample portfolio for Bethaney here. And so these are 3 properties, 2 duplexes, 1 single family. Given that Bethaney is looking for cash flow, multifamily would probably be a great option for her. Higher rent to price ratio, of course, more doors. Of course, in a 1031 exchange, you need to replace essentially all of the debt and equity of the property. So we are just under that $500,000 mark. In this case, she would probably have a small taxable portion if she didn't replace the full $500,000. But in replacing that $500,000 with this $463,000, she has now taken one property and created a portfolio that has gross annual rent of nearly $60,000. That after fixed expenses are paid is seeing over $20,000 in income hitting her bank account every year, and adjusted for maintenance and vacancy, variable expenses, just under $10,000 a year. And we're not going to go into too much detail about maintenance and vacancy, but it's explained in depth in the property rating ebook. And following this call and following up with all of you, I would be more than happy to explain where maintenance and vacancy come from, what those mean, and how we can account for them. So much in the same way we just did, we'll go to the website, and we're just looking at available property here. You know, we won't really mess with any other filters. We'll assume that Bethaney is using conventional financing, needs to replace some debt during her 1031 exchange, and then we'll simply sort by cash on cash return. You can see again, you know, even using some broad criteria, not going into specifics just yet, even initially, we can start seeing the types of properties that are going to make the most sense for an investor like Bethaney in specific markets. So we see Southwest Florida there, we see Memphis there. And this is how we start our relationship with yourself as the investor, myself as the advisor, in understanding your criteria, evaluating markets, evaluating different types of investment property. Okay, so what happens next? Because right now, we've gotten to a point where through our discussions, we've set your criteria, we know what market or what markets are going to be best for what you're looking for, we know your budget, we know what types of properties you've liked and you've disliked. Well, here are the next steps. We get you connected with Reed Hazard at AmeriFirst for pre-approval. Because your pre-approval is your golden ticket to being able to place an offer on any property that meets your criteria. Without your pre-approval, you know, your offer won't be accepted if you're financing conventionally. Of course, you don't need one if you're buying cash. Once we have your pre-approval taken care of, we introduce you to the regional rep in the market. These phone calls are so valuable because not only can you ask those market-specific questions about specific neighborhoods, their experience, their thoughts, but you're also able to give the regional rep, your buyer's agent on the ground in the market you're looking for, your specific criteria, and then they'll go out and start finding properties specifically for you, uploading them to the website, that information together. And you'll start seeing properties on the website and sent to you that are uploaded specifically for you. And eventually we'll get to a point where you'll say, this is the one that meets my criteria, this is the one that I've been looking for, let's submit an offer. And so an offer is written up based on what you're comfortable offering, what the market says the home is worth, based on recently sold comparables, the property condition, inventory, the amount of offers, and we determine a fair market price that's going to make sense for you and is going to help you invest in the property that you want as an investor. One thing that I really like to highlight and make clear is that a lot of our conversations, we do due diligence on the market, certainly the team, but when we submit an offer on a home and we open escrow, there's a whole due diligence process on that specific property itself as well. And what do I mean by that? First and foremost, your offer is always going to be contingent on a home inspection. I can't stress how important a home inspection is, and I no one on our team would ever recommend moving forward on a home if you haven't done a home inspection. A home inspection is going to tell you everything that you need to know, most importantly about the major systems of a home, the air conditioner, the roof, the appliances, big ticket items that can affect your returns down the line. And the home inspection not only gives you that information as the investor to know what to expect down the line of ownership, but also gives us the power to negotiate on your behalf. And we negotiate a credit, a reduction in sales price, negotiate repairs, because ultimately we want you to experience as an investor the least amount of maintenance as possible in your investment property, because maintenance takes away from your overall return. And that's why we're investing, to maximize our return, whether it be to maximize our cash flow or maximize our return on investment. Regardless, what we want is to have our investment capital work as hard for us as possible. And a home inspection is a really important aspect of doing so. Then there's also the appraisal, and this is most important for financed offers. We certainly don't want to be paying more for a home than it's worth, especially not an investment property. But also your lender is going to require an appraisal because they can only lend up to what a home is worth. And we generally have a good idea of where a home is going to fall in terms of an appraisal, in the same way that we can determine an offer price, because we're looking at recently sold comparables. We're looking at the market in general, and based on recently sold comparables and inventory and condition, it determines a price that the property is going to fall with. You'll notice on the pro formas on our website, and like I said before, this is the most important aspect of the team in real estate investing, your property manager. But you'll notice on our website, in our pro formas, that we have the property management fee for every property you see on there included, regardless of what market you're in. And it is vital in investing in real estate to work with a qualified, knowledgeable, reputable, vetted property manager, because they do so much in ensuring the financial longevity of your investment property. A bad property manager will cost you money. A good property manager will help you make money. Your property manager, you can see here the list of what a reputable property manager should do for you in your investment property. It starts with estimating those fix-up costs. If it's not a brand new property or it is not rent-ready home, then you might need to do a little work up front. And you want to make sure your property manager can get that taken care of for you and help you coordinate that to place a tenant as soon as possible. They will have the contracting referrals for you to get the work done. They will price your home correctly based on a rental analysis, not at the high end, not at the low end, right in the middle, to place a tenant quickly and effectively, to make sure that you can start collecting cash flow as soon as possible. They'll be leasing the property for you, placing the tenant, finding and screening applicants, and not just taking an application and placing a tenant. I mean, credit check, rental history verification, employment verification, criminal history verification, you name it. That's what we do here at Marshall Reddick. We do such a thorough background analysis on our potential tenants to make sure that they are going to pay their rent on time, they are going to stay for as long as possible, and they are going to take care of your property. And a great property manager will do that for you. And ultimately, all of that leads to placing that tenant so you can start collecting your rent and your money can start working for you. All right, time for our last poll this evening. One moment. Okay, once again, completely anonymous. However, I am looking to add an investment property to my portfolio right now in 3 months, 6 to 12 months, at least a year. No idea. All right, we'll give it just a few more seconds here. All right, and we'll go ahead and share the results here. It looks like 1 in 3 of us are ready to add a property to our investment portfolio right now. So very exciting. And then the rest of us, pretty evenly spaced out here for you know, when we're looking to add, whether that be this year or next year. And again, regardless of when you're looking to invest, it's never too early to start doing our due diligence, start the conversation, start meeting members of the team. So when you get to the point that you're looking to invest, you are ready to go. You know what you're looking for, where you're looking for, and why, essentially. All right, a couple resources that I want to share with everyone who is on the webinar tonight. For those of us that are going to determine that markets outside of those that we know are the best for our specific goals, we have plenty of resources so you can learn about the markets. We have recorded webinars just like this one. We have market data packets like you see here on your screen for every market that we're in, so that you can learn more about the local economy, the job market, the housing market, and understand more about what makes those areas tick. So that's all free. The URL is right there at the bottom of this slide. And in this presentation, if you send me an email, ask for a copy of these slides, I'm more than happy to send those off. They'll be available on our website tomorrow as well under the Learn tab. And here is the link to the Learn tab directly on our website. Again, encyclopedia of real estate education, all free, very easily accessible. Highly encourage all of you to spend some time on there, learn about different markets, different types of properties, etc., because that'll really help in doing your due diligence. And know who you're working with. Check out our reviews, check out my reviews online. Hear what other clients and investors are saying about us and their experience. And of course, we're all over social media. But I want to thank everyone who was on the webinar tonight for joining us tonight. I'm really looking forward to following up with all of you after this webinar. I would love to hop on an initial call with each and every one of you, just learn what it is that motivated you to join tonight, what it is that you would be looking to accomplish in real estate investing, and just sharing more about us and how we may be able to help. And that is really where it where it all begins. All of my contact information is right there on the screen. You can coordinate a consultation directly at marshallreddick.com/consultation, or just shoot me an email, give me a call, or write me a text. All of those methods of communication work. So thank you again, everyone, for joining us tonight, and looking forward to speaking with you. Hope all of you have a great evening. Bye.